What's up YouTube? Welcome back to my YouTube channel with another video jam-packed full of information. And today we're going to be talking about the trade that I took on Friday. It was a beautiful trade, perfect setup, and we took it on Google puts, meaning we traded Google to the downside. And I just want to talk about 3 points that I use and that I look for in order to execute on these trades. And this is part of the strategy that I've talked to you before about the break and retest of the pre-market highs and the pre-market lows. So let's get right to it. I won't take too much of your time. I just want to make sure that you guys understand exactly how I use this strategy to create an extra income for me every single morning before I even go to work, before I even get on with my day. This strategy allows me to make money every day before I get to do any of that. So without further ado, let's get going, man. So here is a chart of Google, and as you can see, I've already marked my pre-market lows and my pre-market highs. So this is what I do every single morning, looking for a setup, looking for weakness or strength in the market. And since we've been a little bearish these past couple of days, this whole week actually, I've been looking for sells to the downside or looking for puts on stocks to the downside. And so I found that Google was acting pretty weak as soon as market opened. It just decided to dump, right? So I wait for 3 specific things. Number 1, I wait for the break and the candle closure of either the pre-market highs or the pre-market lows. That's the main key to figuring out if I am actually interested in taking this trade or not. So as you can see here on this chart, we have the pre-market highs and the pre-market lows already marked. So I'm waiting for a break to the downside or to the upside. And as you can see here, we have 2 massive red candles, but one specific candle actually closed below pre-market low, which is this candle here. As you can see, we closed below pre-market low, and now I'm waiting for a retest. And I'm also looking at the 5-minute and the 15-minute time frames are congruent to each other, so that I know that we are bearish and we are going to the downside, that we are having a lot of selling pressure, as well as the volume here at the bottom. You can see the volume tabs and the volume bars, as you can call them, and it's all red, right? So we get a candle closure here below the pre-market lows. And the next thing I look for is the retest. So as you can see, this next candle here, it didn't give me too much of a retest. Didn't give me too much of a retest, so I waited for the next candle to pop up. This next candle here gave me a little pop to the upside. I'm going to show you here. This candle here gave me a little pop to the upside, and this is the one I was interested in getting in on. So I'll bring it up right here. This is the trade that the candle that I was actually interested in getting in on. As you can see, it pops up and it taps in this area right here, really close, right here in this area, really close to the EMAs and the VWAPs. But as you can see, this is the 5-minute time frame, right? 5-minute close below pre-market lows. Then we wait for a pop. This third candle gave me that pop. And as you can see also on the 15-minute time frame, you can see that it gave us that pop right here. Let me erase this. It gave us that pop right here, and it tapped into that red VWAP line. That was my indication that we are still holding it down to the downside, and I'm gonna get into my trade, get into position to ride this wave down. Now my stop would be right up above this pre-market high, pre-market low, line here. So my setup would look like this. I would enter my position here. My stop would be right up above and inside the zone of the pre-market lows, and we're gonna ride this thing down as low as it can possibly go, depending on how many contracts we have, because we also want to trim as we start going down and start taking profits. And fortunately for this trade, we took it all the way down We had our first trim at 20% and then our last and final trim at 30% here at the bottom, which gave us a 1:5 risk to reward ratio. It was a perfect setup, A+ setup. We wrote it down. The 15-minute is also bearish, breaking and closing under that pre-market low. So that gave me a perfect indication that we are going down. And it gave me a perfect setup to analyze where exactly my stop was going to be at, because you also want to know if it doesn't go your way, you want to know exactly where you're going to get out, so your stops, your losses can be very, very small and you can maximize your wins. So here we waited for the break of pre-market low. That was my first indication on the 5-minute, right? The 5-minute time frame gave me a break below 5, the 5-minute candle below pre-market low, right? So we're looking for puts, we're looking for shorts to the downside. Then the next candle can continue to the downside, but it didn't give me a pop, right? So I waited for a pop on the third candle, which gave me that pop to the upside. It rejected the VWAP on the 15-minute time frame, and that was my entry. On the 5-minute time frame, same thing. It gave us a nice, beautiful pop. I entered position and we wrote it down for an overall 30% return on our investment. So not only do I wait for that break of pre-market lows or pre-market highs, but I wait for the candle to actually close. The reason why I wait for the candle closure under those levels is because this thing can literally wake itself back up, like how it did here on this candle right here. This big 5-minute candle in the beginning of market open came down to the pre-market low section, right? And it wicked, right? It wicked right off of it, meaning that's a level that it could either reject and bounce and ride this thing to the upside, or if we can break under it, it'll be a strong push down to the downside for continuation. And that's why I wait for the candles to close before I even make a decision. I don't want to just go in with because it has momentum to the downside. I want to make sure that the candle closes to secure myself that it will continue going down. And now I will also have the idea of exactly where I am going to take my stop loss in case it doesn't want to go down and decides to pop back up. So here it closed right under it, and that gave me a clear indication of where my stop is going to be, because if the stock decided to climb back up, I would have my stop right inside that zone, put it like this, and then just ride it all the way down. So my entry was here at this candle, and my stop loss would be very, very small back inside the zone of pre-market. So I'm gonna give you guys some more examples. Here to the left, we're gonna continue using this Google chart. You can see we can mark our pre-market highs, which is here, right? This is what you want to do every single morning before even entering any trades. Before the market opens, you want to analyze these stocks, mark your pre-market highs, and then you want to mark your pre-market lows, which is here to the left. So now you have your range, right, of where the stock is trading. So this right here could have been a quick scalp on Google, puts to the downside as well. As you can see right here, we had a 5-minute candle closure to the downside, right? This candle here closed right underneath it, right? Let's put it this way, like that. And now you could easily either get in on this little mini pop that happened right before the continuation to the downside. That's exactly where I would go in, on that little mini pop. So it would look like this. You would just enter there. Your stop loss would be right above. You would enter there. That stop would be right back above the zone, and then you can ride this thing as low as it goes. And so you're marking those levels, and you start trimming your way down, and you start taking profits to new low days, which is all these candles here to the downside. Then let's say you had an extra runner. These candles here came all the way back up, and you would get stopped out at this candle here. You would get stopped out at this candle right there. That's the candle that would tell you get out of the trade on your last runner. It is what it is, right? Or you would just stop out at break even wherever you entered that position, because these green candles here closed above the green 9 EMA. So that would stop you out at break even and call it a day, right? And so I wait for the candle closure on the 5-minute time frame, which is this one here, and we enter on the next candle to the continuation to the downside. So we're going for puts, we are going for shorts, we are trying to sell this stock and make it go down. The more it goes down, the more money you make, right? So that would be our trade there. Marking our zones, waiting for the candle closure, right? Entering position, having your stop to be back inside the zone, and writing this thing down. If we continue left, right, let's go to another chart. Ooh, this one's a beautiful one. So again, what do we do before anything happens, before the market opens? The first thing we do is analyze the chart and mark our pre-market highs and our pre-market lows. So I'm going to show you guys how to do that here again. You mark your pre-market highs, which is here, and you mark your pre-market lows, which is down to here, right? Now you have your range, right? Let's move this a little bit further that we can have your range. Cool. So same thing here. We have a range. As long as this chart is trading in the middle, trading in the zone, it could be literally just bouncing up and down like this, you do not trade it, right? You want to wait for the break of pre-market low, which is like this, come and retest and continue down, or you want to wait for it to pop, retest, and continue to the upside. Well, here we had a beautiful momentum to the upside. You can see this green candle here in the middle. This one here had super power, and it just pumped up. We had a little retest of some EMAs, but it never closed above the pre-market highs until we get this candle here to close above pre-market highs. This is where you enter your position, right? You enter your position on this green candle here, right? And then you can easily have your stop like right below that elbow of the new highs and new higher lows. So technically your setup would look like this. You would enter there. Your stop loss would be below that because it's also inside the pre-market zone. So if a red candle were to come down and close below that, then you would stop out. And look at this. Let's say you put your stop there, your profit would be all the way up to there. That's a perfect 1 to 3.5 risk to reward ratio. So that's how your setup would look like with a perfect break of that pre-market high. It didn't necessarily test the pre-market highs, but I mean, you can see a small little wick happening there, right? If you go to the smaller time frames, like a 2 minute, oh shoot, what happened here? Like a 2 minute here, or even the 1 minute, which I don't like to look at those smaller time frames because they trick you out so fast. So I stick to the 5 and the 15-minute time frame. Those are the ones I really stick to be more sure of my trade and my position. Those are the time frames that I really like. So yeah, I mean, you can see this 15-minute candle is just super huge. Came back to retest at 90 EMAs. You could have entered position there and then held it the next day, but I mean, we're not really, day trading or swing trading on these setups, right? You want to get in and get out in no more than an hour, right? You're trading for at least an hour every single day and you're done for the day, as long as the setup is perfect and positioning itself how it needs to be. And you're waiting for those confirmations, right? That's the most important part. You're waiting for those confirmations to happen. You want that break above pre-market high and that candle closure. You want it to close before even making a decision, because like it did here on this first candle, you can see that it ripped up above pre-market highs and it wicked back down. That right there would have stopped a lot of people out. It would have scared you out of position, because the next candle was a red candle and it was coming down, and I'm pretty sure when market was happening, it was moving down pretty fast, so it would have stopped out a lot of people. But then we wait for that candle closure, for the candle to end, and the next candle to begin. above pre-market highs, that's when you enter position, and it gives you a clear area of where you can stop out if it does not go your way. Now let's go to left. Okay, so okay, this is perfect, right? Now this is a chart right here on Google where you will not take a trade, right? You can mark your pre-market highs. Again, you analyze this, you mark your pre-market highs, and then you mark your pre-market lows all the way down here. Boom, because this is the wick here of your pre-market highs. I'm gonna mark it here, boom, and then the other side over here is your pre-market high and your pre-market lows, right? Those squares indicate your pre-market highs and your pre-market lows, right? As you can see in this chart, we never break below pre-market lows, or we never break above pre-market highs. So what does that mean? We don't trade this stock. This stock is not giving you an A plus setup. It's not giving you an A plus direction of where the chart is going, and you simply just don't trade it. You look for something else that is actually setting up for your strategy. The strategy is a strategy because it can be repeated over time every single day as long as it sets up for you. This is a perfect chart of a no trade. You do not trade this stock. It never breaks above pre-market highs and it never breaks below pre-market lows. If you wanted to trade this stock, you would really have to know how market structure works, and you can trade in the zone. Like here, you would have to understand that the 5-minute is now bullish, right? We see the momentum pump to the upside. We get a retest of these EMAs. We get a little pullback. You would enter that pullback and ride it up as high as possible to the pre-market highs, and that's where you would take your sell, especially at this candle closure here. This here is an evening star, which is a bearish pattern. That's where you would stop out right away from there to there. But the strategy that I'm showing you guys does not fit this system of trading in the zone. I wait for the break above or a break below. If you don't follow that to the T, you can lose some money. So if we keep going left, here's another one that kind of just went in range all day, or you could have possibly stopped out, right? So we mark our pre-market highs, right? This would result in a loss if you would have took this trade, right? And pre-market lows. So as you can see here on the first couple minutes, we get wicks. All these here are wicks. All these here are wicks and rejections of the pre-market lows, right? You obviously don't enter those positions, right? Or actually the pre-market low would be this one right there. Yeah, so technically that was my fault. Technically this is a pre-market low right there. It never ever closed below pre-market low. Yes, we got a super close closure there, but it never did. It wicked, came back and closed, wicked just a little bit and pumped up all the way. That is not a trade zone or an A plus setup for us to trade, because it never broke and closed below it. We need this candle to really just boom, close like that. We need it to close like this and then get a nice little retest of something like that, and we got to get that continuation down like this. Boom. That's what we want to physically look at for entering this trade, to enter at this candle in the middle. But it never closed. It never closed below that pre-market low. Now if we go to the right a little bit more, right here we finally close above pre-market highs. As you can see, we closed. We do get a red candle, but it didn't give me a retest here at the pre-market highs. You could have still entered there. You could have entered there at that red candle, right? You could have entered there, and your stop would be right back inside the zone if we were to close inside that zone, and then you take your dub, right? We could have had a small scalp here depending on the volume with that, but I mean, I probably wouldn't have risked my capital on this trade here, especially towards the end of the day. there is a lot of momentum, and as you can see from that pop, it actually came back down and it was coming down pretty aggressive, but it broke above pre-market high. We waited for that. We would have entered on that red candle, your stop loss below, back in the zone, and you take your profits wherever, as high as it goes, right? So just a quick recap. Again, this is a strategy that I use every single day. This is what I look for every single day, and I wouldn't change this strategy for nothing else. It's been working for me. I have modified it a little bit with you also keeping an eye out on the 15-minute time frame and the 1-minute time frame. So as you can see here, it's giving me those bullish sentiments here. Like here we had a 15-minute candle closure, right? We closed 15-minute right here above the pre-market high, right? We closed there. So you would enter on the next green candle and you ride it up, and then you would stop out right here on this next one because it closed below pre-market highs. But that would be a quick scalp for you to enter and take a quick gain, right? And that's also giving me, like, if we look at the 1 hour time frame, where are we at? Okay, here we are. Let me just move this down a little bit. So what are we looking at now? Where are we at? I can't really find where we were at, but anyway, yeah, that's the strategy. We wait for a candle closure. Like, that's the main thing, because if not, you will get wigged out. We wait for a candle closure below or above pre-market lows or pre-market highs, and that's where we kind of get our idea of where we're going to enter our position. We wait for that retest, and our stop loss will be back in the zone of the pre-market highs or pre-market lows, and then we just ride the trend to the downside or to the upside. And yeah, I mean, this is how I was able to make $500 on Friday on these Google puts. It was just a perfect setup, perfect entry, and executed perfectly. I alerted it on the chat, and yeah, I show up for my team every single day. Whether I win, whether I lose, whether we find no trades, I show up for my team every single day at Relentless Trading University. And so soon we will have it out to the public, where you guys will be able to sign up and join me on this trading journey and help you guys understand what trading is all about, how to trade options. Options is a beautiful way of creating income to the upside of a stock or to the downside of a stock. That's why I love options. And yeah, Relentless Trading University is going up, man. It's going up. So I hope you guys found some value to this video, and exactly how I find these setups, how I set up my chart analysis before the market opens, and how I wait for a candle closure above pre-market highs and pre-market lows to indicate me and confirm which trend or which way we're going on the stock for that day. And it helps you identify where you're going to take that loss, because we want to minimize our losses to the smallest extent and maximize our wins to the greatest extent, because that's how you become profitable. And with following this system of the break and retest of pre-market highs and pre-market lows, that's how you become profitable, by following all the rules and being disciplined to get out when you need to get out, and taking your profits when you need to take your profits. A lot of times we get greedy and we want to run a massive dub, and it results in the chart to actually reverse on us and stop us out. So I hope you guys learned some on this video. Like and subscribe to my YouTube channel. It would greatly appreciate it. Share it with your friends, and it would greatly help the momentum of this video to get out there and show a lot of people that trading is possible, making money in the stock market is possible, and it can do a lot of great things for you and our lives. So let's get it, man. It's Grandma. You know what it is. Relentless Trading University.